Chris, great to have you back on the show. I do want to start with the underlying fundamentals and what Kate Rooney just laid out in terms of the price action we've seen in Bitcoin, in Ether, in the cryptocurrency markets overall, as we do see this Ukraine-Russia crisis continue to unfold.
Sure. The environment is arguably the most complex macro environment the industry has seen in its history. And I think as a result, we have a lot of counterparties that are looking to more complex contract structure like options that capture that volatility when it emerges. Now, that all said, what we're starting to notice is that the debate around the store value argument versus the risk on argument is becoming a bit contentious. And as a matter of fact, what we believe is happening is there's two camps. And there are those that are deploying assets from a risk-on, risk-off perspective, and those that are deploying assets from a kind of an inflationary hedge perspective. And we think this is at the core of why we've been trading in a fairly tight range, 36,000 to 44,000 over the course of the past couple months.
Got it. So I do want to get your thought on BlackRock's Fink's comments in that note, and specifically the role that Russia-Ukraine could actually play in terms of accelerating digital currencies. We know it's been used to get aid to Ukraine, for example. There's been also on the flip side of that a lot of speculation, if you will, that it could be used as a sanctions dodge in Russia too. How does this continue to propel or change the narrative around cryptocurrencies?
I think they're both very important topics to discuss. First and foremost, the response by the crypto industry to the sanctions, I think, has been in full support of applying those rigorously. What's been confusing to me is this perception that transactions in the Bitcoin and other cryptocurrencies are opaque. As a matter of fact, they're arguably more transparent than what we would see in traditional financial markets, given the transparency of the underlying blockchain going all the way back to Genesis block. So that, coupled with sound AML and KYC procedures, I think will put the industry in a really good position to prevent and track illicit activity. Now, having said that, I think something that's really important to acknowledge is any time that there is geopolitical uncertainty, there's some amount of concern about fiat assets, fiat currencies, and whether or not they will continue to be able to kind of hold their value. And what we're seeing with the Russia-Ukraine situation is that more and more people in the Western world are starting to acknowledge the fact that a decentralized asset that is not tied to a centralized government has a lot of kind of risk mitigating aspects that are interesting to individuals trying to, let's say, work around the concerns that they have around access to their own financial assets within their country's banking system.
Yeah, Fink specifically refers to the ability to lower cross-border payment costs. And I wonder whether or not you think some of the, if we call this a use case, sadly, if it's going to turn around the views of some people who've been really skeptical and critical of crypto. I'm thinking of a Charlie Munger who called it a disease, or Jamie Dimon who had some other choice words for it. I wonder if this changes their mind a bit.
I think it will. It's perfectly natural anytime a new innovation emerges for people to question it, right? It's new. They don't understand it. But as more industry efforts are put into development of the underlying technology and as more education takes place, I think it's natural for people to start to see these use cases. We've talked about stablecoins as a way to offer access to banking services that the underbanked population don't have access to right now. That's the same concept that we're talking about for war-torn countries that no longer have a viable financial system. So at its core, I think these cross-border remittances that are afforded through things like stablecoins and other crypto assets will absolutely be one of the pillars that this industry grows up around over the course of the next 5 years.